This conference will now be recorded.
Okay, the first statement that we're going to learn how to prepare is the income statement. That statement begins with your revenue, and then we're subtracting it. We have inventory that we sell. We subtract that to get the gross profit. Then we subtract the operating expenses to get the net income before taxes. Then we have to calculate the taxes to come up with our net income after taxes. So this is where we're trying to go. And what this is telling us is that during this period, 2015, we had this revenue, these expenses. This was our net income after taxes. So that's the first thing we're trying to do. Now we worked on steps 1 through 4. We'll skip steps 5 through 6, and we're in the steps 7 and 8 now, and I'll go through those in a second. But the first 4 steps you never see on a company. So when you look at a company, what you have are their income statements, which is how much income did they make for the period. You have their statement of retained earnings, which are the amount of earnings that you've had income. How much of it over a period of time have you retained in the business? And finally, you have a balance sheet, which represents the permanent assets you have, beginning of the year, end of the year, of the various assets, liabilities, and your equity in it. So personally, you had an income statement, and we're in 2021, you're going to have an income statement, and there's enough income, you're going to prepare a tax return based on that. But then, given your income, how do you look financially? What assets do you have? How much cash do you have in the bank? And what other assets do you have? What fixed assets or long-term things do you have, like autos? What are your liabilities? And your equity, of course, is the net amount that's left. So when we have a business, it's the same thing. Okay, we had the income, so what are the permanent assets that we have? Current assets, fixed assets. What are the current liabilities that the business have? And then what are what's the common stock? And a new term I have here now that we'll be working with, retained earnings. How much in earnings have been retained in the business? And with a balance sheet, the total assets that we have always has to equal the total liabilities and equity. So we got the assets over here. That's that. So this is the accounting equation: assets equal liabilities plus stockholders' equity. So the assets that we have up here, the total assets, must equal total liabilities plus total equity, or total liabilities and equity. So that balance sheet has the balance. And of course, if your trial balance, your balance sheet should balance. So these are the 3 statements that we'll be preparing on our midterm exam. And we've been going through a process of getting there. We did steps 1 and 2, where we analyzed transactions and made journal entries. Then we just finished steps 3 and 4. We post to the ledger and prepare a trial balance. I'm skipping 5 and 6 for now. We'll come back to it. But we're going to go on to 7 and 8, Well, we prepare the financial statements and we close the accounts. So we're on the steps 7 and 8, where we prepare the financial statements and we close the accounts. So this is where we will be at midterm. If you're taking a problem from steps 1 through step 8, but skipping steps 5 and 6. Skipping steps 5 and 6. Are there any questions? Are there any questions? Okay. So let's drop this down here. And let's pull up our Excel spreadsheet. And hopefully you realize, I think you all are doing well on Excel. And of course, you just have to go this far from now. We'll type 2. But we got this format, and you're making your journal entries. Then you're posting them to the T accounts. Clear these out. And then you're preparing a trial balance. This is the income. Let's see, clear content. You're up here preparing a trial balance. So I want everybody to pull up, go into course content and pull up this Excel spreadsheet. So I have revised it just a bit, but everybody should go into course content and pull up this Excel spreadsheet. Can we do that? And what I'm pulling up now is trial balance exam 1. And so now we're going to move trial balance exam 1 from steps 1 through 4. We're getting ready to do steps 7 and 8. 1, 2, 4, 5, 6, 7 and 8. So we're getting ready to do steps 7 and 8 to prepare our financial statements. Okay? So let's see if we can make these journal entries quickly. What's the first journal entry? And I'm not going to put the accounts and types down, but we know we start a company and we're going to debit what?
You're going to debit cash.
Thank you. And we're going to credit that for 100,000, right? Okay. Does everybody know how to post this to the ledger? Is there anybody who cannot post that to the ledger? Well, we'll go and do it anyway, just in case. So we'll put 100,000 in here for cash. And we'll go over here this 100,000 in for common stock. Then we're going to go to transaction 2, where we purchase inventory on account for 200,000. So we're going to do what? Debit what inventory? Type 12 and credit accounts payable. That was 200,000. And I guess I will put the types in. So this is a type 1, and this is a type 12. Let's move to our next journal entry, which was pay dividends in the amount of $20,000. So that's a type what? 10. And we're going to debit dividends. And we're going to credit cash. And let's see if we can get these posted. So we debit inventory for 200,000 and credit accounts payable for 200,000. Then we credited cash for 20,000 and we debited dividends for 20,000. Our next transaction, we paid rent of 25,000. So going to journal entries, so type 9, where we debit rent expense and credit cash. That was for 25,000. And let's go ahead and post those. Cash 25,000. I'll just put rent expense here, I guess. These accounts below the line are temporary accounts. The ones above the lines are permanent accounts. And that will begin to have meaning as we go through step 7 and 8. Okay, journal entry 5 was paid salary expense 50,000. So we have a type 9 again. And that was 50,000, wasn't it? Number 6, paid on accounts payable, 150,000. So that's going to be a type, what, 8? We debit account payable. And we're going to credit cash. And that was what? 150,000. And finally, we had collection of cash from corporate customers. $200,000. Did I skip one? I skipped. So this is actually 7, and I'll just switch. I won't switch the numbers, but this is a type 15 when I skip. So we're debiting accounts receivable. And crediting sales. So let's go ahead and post that. 250,000 to receivables. Credit sales 250,000. Then finally we collected 200,000. Of course, that is a type 3. We debit cash and credit accounts receivable. For 200,000. And so let's go ahead and post this. So we debiting cash. And we're crediting the receivable for 200,000. And so we auto sum to here. Could have done those both together. Then our balance is going to be equal to what? $205,000. And we'll put them in red since we just kind of distinguishing that they're going to go on the trial balance. With receivables, 50,000 is going to go on the trial balance. Inventory, 200,000 will go on the trial balance. Common stock, 100,000 will go on the trial balance. With sales, that's going to go on the trial balance. Salary expense, 50,000. Rent expense, 25,000. So now we have the items that are going to go on the trial balance. So let's see if we can get the trial balance. And what I told you about the trial balance is that it had to be in the order of this chart of accounts. And so with the spreadsheet you have there now, just update your spreadsheet, your standard spreadsheet. And the first thing you want to put on is current assets. Okay, that's the first thing that goes on your here. And the current assets come from these items here. The current assets come from these items. 100 through 131. Those are always the first items on there. Then the second set of items that comes on there are the long-term assets. That's the second thing I want to see. The third thing I want to see are the current liabilities. The next thing I want to see is your stockholders' equity. Well, long-term liability, excuse me. Then I want to see stockholders' equity. Then I want to see revenue. Let me move revenue to here. And then I want to see expenses.
Dr. Boyd,
Yes,
I have a quick question.
okay.
Did we forget number 6 in the T accounts?
We may have, did we not put it in?
Yeah, I don't think we put it in there.
Okay. Let's go back to the T accounts. Now, we did them out of order. Let's see, because we had a payment on it. So is 6 missing?
I think so, because I went ahead and numbered mine as we did it, and 6 was accounts payable debited, and cash credited, and I don't see an extra cash on yours, the 150,000.
So you don't see the one, okay. So you're saying that,
We might have missed it, what I'm saying.
okay. So 150, thank you. So then we put that 150 in here. Cash is going to calculate automatically. And then we need to put the credit here at 50,000. Thank you. So now it's time for you all to work. So you all see these accounts. I want you to do the trial balance in the order I just told you. So I want everybody to now go and do a trial balance in the order that I told you. Is that clear?
Yeah.
Okay, so go ahead and put that trial balance in that order. Over half of you did not do that, and you'll see why in a few minutes.
Mr. Board, you like
Yes,
to,
yes.
I just have one question. For number 6 on the journal entry, how I was just wondering how you got I just want to get understanding how you got you debited accounts receivable and sales as the credit on that one.
Okay, that I reversed these now. So this is actually 6 and this is 7. When we sell on account, we don't have the cash, but we've done the work.
Right.
So we debit account receivable and credit sales. We have
Okay.
done the work. but we don't have the money. Then,
okay.
then in this next transaction, we get some of the money and we debit cash and credit account receivable. So we like being in this situation
Mhm.
where we've done the work, we get the money later.
Yeah, we did something about today. Yeah, no.
We got, I can't hear you. Okay, there we go. What's up?
So everybody work on that trial balance. I'm gonna give you a couple of minutes to get it in the order that I asked you.
Well, what's the order you wanted it in again? I was you can go back to that page real quick.
Quick, pardon?
No, I said the order. I didn't catch that. The order you wanted it in for the trial balances. When you typed it in.
I want it in the same order as it is in the chart of accounts.
Oh,
Here's the chart of
okay.
accounts.
Okay.
Name,
Okay.
and I put in the major headline. That's fine because we want to be clear.
Yeah, for sure. Okay.
So you're always supposed to have that hard copy of that chart of accounts ready. My chart of accounts done. I'm at my trial balance done. So what's the first thing on the trial balance? Can't hear you, and I'm not on the chart of accounts.
Cash will be the first one.
How much cash is it? How much cash?
55,000.
Thank you. What's next?
Accounts receivable.
Accounts receivable. How much is accounts receivable?
50,000.
What's next?
Inventory will be next.
How much is inventory?
200,000.
I'm relying on you all. I don't have a chart of accounts. We have any other current assets? I don't think so. Any long-term assets?
No,
What
I
about
don't think any.
what's our current liability?
Accounts payable.
How much is it? Tell me, I don't have my T accounts left, so you have to tell me how much is accounts payable.
50,000.
Y'all want me to flip back and forth? We don't have any long-term liabilities, do we? Then we go to common stock. How much is common stock? How much is common stock?
Common stock.
100,000.
And I'm gonna put that new account we talked in here, retained earnings. And right now it has a zero balance. And we have what's gonna come next. What's our next account?
Dividends.
Dividends. How much are the dividends? Were they 20,000? Then we had sales. How much were the sales?
$250,000.
Thank you, 250. And then we had two expenses. What were those expenses? Salaries and rent. So salaries,
50,000.
50,000. Rent,
25,000.
so are we in balance? We'll come up here, auto sum both sides, and see what happens. 400,000. Okay, so now we're ready to do our income statement. And when we do the income statement, the income statement consists of all accounts from revenue down. And so when I get ready to do this income statement, I'm gonna get that, Put it right here. We didn't get to sales returns until, I think it was trial balance exam 5 or whatever. But we don't have anything there now, so our net sales is 250,000. We don't have any gross profit. If we had it, we would cost of goods sold. If we had it, we would subtract it. And so the gross profit is 250,000. Then for my expenses, I'm simply going to come in here and paste them right there. And you can see if you got a lot of expenses, it's probably going to be a good idea to have these expenses together. You don't want to be picking all through everywhere. And so with that, our total operating expenses are what? 50 plus 25, 75,000. And what's our net income going to be? Anybody know what the net income is going to be?
$175,000.
175 seems right. And so we simply get that by gross profit less expenses. So this is an income statement. So as you can see, you've done all the hard work when you get to the trial balance. So when you get ready to the income statement, if you got it in the order that I told you, you simply take the revenue, put it up here at the top of the income statement, put the expenses below, subtract the expenses from the revenue, and you now have an income statement.
Mr. Board, I have a question.
Yes.
How did we get the net income?
We simply, let me clear this out. We put in this formula, equal, then we click on our gross profit, minus, we click on our total operating expenses, let's see, typo. Okay, they corrected my typo. So we simply got the gross profit, subtracted operating expenses from it to get the net income. So revenue, you know, income is always revenue less expenses.
Okay, thank you.
You're welcome. Thanks for asking. You help some other people out. So if you got questions, you don't see something, just stop me. Our beginning retained earnings is 0, and now we're concerned with how much of these earnings we kept in the business. The net income was 175. So we had available earnings of 175. And when that happens, just move your lines over. Then we're gonna get this dividend. We had it right here, 20,000. So dividends are payments to the owners out of profits. And so our net income then becomes, our ending retained earnings, the earnings that we retain in the business, becomes 155. So this is a standard setup for this formula. We have beginning retained earnings, which is 0 because it's a new company. We bring that net income down, subtotal, We subtract out the dividends, whatever the dividends are. That gives us the earnings retained in the business. The earnings retained in the business. Very simple and easy statement to do.
Mr. Boyd, I'm sorry, I have another question.
Okay.
How did you resize the box? I have a MacBook as well, but I don't know how to resize it. The little columns.
This here, yeah, just go up here and fidget with it. Can you see where I am?
Oh yeah, you clicked on little alphabets.
You just sort of, see if I can bring this down. If I want to increase the column size, I come in and do this and just move it over. Got it? Move it over.
Yes, I got it. Thank you.
You're welcome. So Excel is really wonderful. Hopefully you all are seeing that. It's really wonderful. Now we've got to do a balance sheet, which is, okay, we got the revenue. That's expenses, net income. We know how much of the retained earnings has been retained in the business. We now need to do a balance sheet consisting of the permanent accounts, all other items from retained earnings up, go on the balance sheet. So once again, you're seeing why it is nice to have those accounts in the right order. It's nice to have the accounts in the right order. A balance sheet, and you should have this balance sheet on your Excel spreadsheet. It consists of the assets, total assets, less the liabilities, total liabilities, stockholders' equity, so just go ahead and clear this out. So on your spreadsheet, just clear that 2,000 out. Total equity, and then total liabilities and stockholders' equity has to equal total assets. Okay, so what we're gonna do, we're gonna come to the top of this balance sheet, and we're gonna get the cash and receivables, copy those. And we're just doing the end of the year, and we're gonna paste them. So the 55,000 and the 50,000 we paste. Inventory is next because there's another account that can come in there sometime. I didn't paste that, so I'll just put it here. 200,000. So that's all of the assets. So if we had long-term assets, they would come in here. So my total current assets, I simply auto sum this, 305,000. I don't have any long-term assets. So my total assets are 305 in this simple case. So these are the permanent accounts. These are the accounts that we still have. Next, I'm going to come up here, and of course, this is the asset part of assets equal liabilities plus stockholders' equity. I got one liability, accounts payable, 50,000. So now I'm going down here and making sure the bottom is going to equal. So we have one liability, 50,000. Just giving you a simple example. So the total liabilities are 50,000. No long term. So right now the liabilities are 50,000. Next, I need to go up here and get anything left for stockholders' equity. Now, you see this line is at retained earnings. So you know in preparing a balance sheet, no account that's underneath that comes on the balance sheet. So I'm going to put in the common stock, which was 100,000. Now, if I add these numbers up right now, and I guess I can go from here to here. If I auto sum them now, I'm at 150. But I got to be at 305. Why am I not at 305? So total assets and total liabilities and equity have to equal, but I'm not there. What did I leave out? Let's go to the statement of retained earnings. We begin your retained earnings at 0. But now we have an ending retained earnings of 155,000. When I prepare the balance sheet, whatever the ending retained earnings is, not the beginning one, 0 in this case, whatever the ending retained earnings is, I have to put that on the balance sheet. So I'm gonna go in here and put the 155 in. So magically now, total assets equals total liabilities plus total stockholders' equity. And the stockholders' equity would be 100 plus 155, or 255. Let's see if it'll. Okay. Are there any questions? So with today's class, you now know how to prepare an income statement. You know how to prepare a statement of retained earnings, and you need to know how to prepare, and you know how to prepare a balance sheet, which you will be required to do on your midterm exam. So you're going to have to go from steps 1 through step 8. Now, as we finish the process, let's go back to our T accounts for a second. And the permanent accounts are all on the balance sheet. The temporary accounts are not. They're on the statement of retained earnings, and they're on the income statement. And retained earnings is sitting here with a 0 balance. And so what we've got to do is make closing entries where we're going to close out every account below this line and get retained earnings to the proper amount. So we've got to get retained earnings to 155,000. You can think of closing entries is what TSU does with your student account. They charge you in the fall semester. You pay it. They close your account out so that they can charge, so they'll be able to charge you again in the spring and you pay again. So they create the account temporarily for the fall semester, then they close it out because they got to get ready to charge you again in the spring. So that's kind of how closing entries work. So the purpose of closing entries is to eliminate all of the temporary accounts. All of those accounts at the end of the year, every account down here has to be closed out to zero. And the results put in retained earnings. That is, all the temporary accounts are temporary retained earnings accounts. All of these accounts are temporary retained earnings accounts. Once we prepared our income statement of retained earnings, we're ready to close these out and get us a new retained earnings. So let's look at how we're going to do that. There are 4 closing entries we make: 1, 2, 3, and 4. In the first closing entry, we close out the revenue. And we use an account called income summary because we don't want many entries into retained earnings. That's a special account showing what the revenue is, and we don't want many entries in there because a test of the profitability of a company is whether it has retained earnings. So we don't want people to be able to mess around with that so much. So make these closing entries, and we'll review this next time. Also, the first closing entry that we're going to make, we're going to debit sales for $250. That is right there because we got to close that out. So we close it out by debiting it, and we're going to put it in income summary, a temporary holding account as we work to do the closing. Whenever we make a journal entry, we have to post it. So we're going to go down to our T accounts, and we're going to debit sales for $250. It's now closed out. We got debits of $250 and credits. In Word, I can always strike that. So we're at, and we got a credit in here of $250. So we're just posting that closing entry where we debit the sales and credit the income summary. That's closing entry 1, where we close out the revenues. Closing entry 2, we close out the expenses. So what we're going to do is to pick up these 2 expenses, and we're going to put them here. Then the amounts, we're going to copy them and we're going to put them right here as credits. So we're now closing out the expense accounts. So we have to credit them to close them, and we're going to debit income summary for $75,000. Whenever we make a journal entry, we must post it. So we now go back to the T accounts, and we're crediting sales expense with the closing entry. We're crediting rent expense with the closing entry. And now we're debiting income summary. So that's closing entry number 2. Let's go to closing entry number 3. Closing entry number 3 always comes from this line, the net income. It could be a loss, but it comes from this line. And in closing entry 3, if it's income, we're going to debit income summary. And we're going to credit retained earnings. So we're not going to muddy up that retained earnings account. Move it down. I'd like you to move it once stuff gets centered, but I will survive as it is. Okay. So we debit income summary and we credit retained earnings. These entries, A students, if it were a loss, we would reverse it. We'd be debiting retained earnings and crediting income summary A students if this was a loss. But because we have income, we debiting income summary, crediting retained earnings. Once again, we go back and we post. So we go to our T accounts and we're going to debit income summary, 175. And we're going to credit retained earnings for 175. Okay. Finally, we have closing entry 4. And what's closing entry 4 probably going to be? We're going to close out that dividend that we paid. How much did we pay? 20,000. So we debit retained earnings 20,000 and we credit dividends 20,000. And now we're going to post that closing entry. So we credit dividends and we debited retained earnings for 20,000. So you see, we try to keep this permanent account retained earnings relatively clean. The only thing that we want to see in that account are earnings and losses and dividends. So what's our balance in the retained earnings account now? How much is in this account?
155.
155. So retained earnings now has a balance of 155. And what is the situation of every account below this line? What balance does every account below that line have?
0.
Every account below that line has a 0 balance. Every company in the world does this. They make journal entries, they post to the ledger, they do a trial balance, they do financial statements. And then they, you've heard about closing out. Yes, they close out all of these temporary accounts, put an amount in retained earnings. Every company in the world, large, small, Microsoft, mom and pop, they do this. And so now retained earnings has 155,000. So go back to the trial balance. So in effect, all of these courses, all of these items down here, I'll just italicize them in bold. Maybe I'll put them in red. All of these items are closed out. And then we'll just put over here in another little box. Instead of retained earnings being 0, it is now 155,000. So we don't do this here, but the way we get it to that amount is to make these 4 closing entries. Are there any questions?
You're gonna post this on YouTube, correct?
Yes, I'm gonna post it in YouTube.
Yeah, I'm
Guess,
gonna have to
guess
see
what
this.
you all are gonna do? What?
I said, yeah, I'm gonna have to see this again.
You wanna see this again?
No, I said I'm gonna have to
Yeah.
see it again. I'm gonna have to see it again on YouTube. Like
Okay.
for practice, because that one time that was just a lot. So I'm just like,
Is that a
all
lot?
right, a little bit, cause it was a little bit, yeah, it was a lot. So I'm gonna go ahead. I got to lock in. So yeah.
That wasn't a lot, was it, Miriam? That wasn't a
Yeah.
lot, was
Yeah.
it? Okay.
Yeah. It was.
Lost.
Now, remember,
I was with you for a look. Then after that, I'm like,
the first day of class, y'all couldn't do a trial balance, remember?
yeah. Well, look. Step 1, we good. I'm good on that part, and I'm good on the other step. I think this 3. I think this step 3. No, 4. It's probably 4 actually. So now I'm just all right. I gotta
Didn't
catch
y'all
up on.
think y'all could never do a trial balance? Didn't y'all
Yeah,
think that?
yeah. I was just say what you just did it's probably simple enough. It's just I just know it's probably gonna take a little
Well,
time, but
I know
it's
that.
probably simple.
I know that.
Yeah. So yeah, I'm gonna have to practice.
Being the thoughtful professor that I am, what do you think you have for homework?
That practice that.
Now, how you gonna practice? How you gonna practice, Tiana?
By doing it.
Yeah.
So your homework will be trial balance exam 2.
Okay.
So trial balance exam 2 is due on Tuesday at 11 o'clock.
Killing me, boy. Killing me.
No.
Wait,
Also
Professor.
good. Yeah, you have to do it. I could get a lecture again on Tuesday. You'd be no further because you didn't try it yourself. But once you try it yourself, to a certain extent, this is easy. You got to trial balance. If you got a trial balance, those financial statements fall right out. Okay, you just got to move the numbers. That's easy.
Yep.
Then you got 4 closing entries. I got those closing entries right there by those statements for you to make and post. So it's the first time you saw it, but you're going to go to that trial balance quiz 2. And you're going to work on that and turn it in to me on Tuesday. And then we'll look at it. And then for my 8 students,
So
then we're gonna work on trial balance quiz 3, then 4, then 5. And by the time you all have done this 5 times, y'all gonna be able to do it. Right, Miriam? Once y'all done it 5 times?
I hope so.
practice
Right,
make
Justin?
That's that's my belief. So come on, that's all right. Practice make perfect.
You're able to do something that most business students worldwide can't do. Prepare financial statements and close out the books. But you're gonna be able to do that. So remember, on day 1, you couldn't make a journal entry. On day 4, you couldn't post to the ledger. On day 6, you couldn't do a trial balance. But 85% of the students did that on the exam. So we start off with a little one. So the next one maybe has 10 or 12 journal entries, a few more journal entries. So look at what we're doing. We're reviewing the journal entries again, so you don't get cold on it. We're posting to the ledger, doing a trial balance. You're just lifting to do those financial statements. And you got the spreadsheet, so you need to be with the spreadsheet now and working that spreadsheet. And then once you get that done, you got 4 closing entries. And of course, you did hit it all today. But the only thing that's a little new are these entries, but they are right here. You were supposed to be making them with me. The closing entries are right here.
I was watching you do it first before I was just taking pictures. Hold on, let me just keep that up. I was watching you first before I.
And take the picture. Oh, you slowing down, I tell you.
Yeah, no, it's hard. I don't like flipping back and forth. I want to look at you do it, and after that, I just do it and practice later. I practice by myself, but I want to see you do it.
But guess what, Noble? I'm actually going to put this in course content, the whole problem in course content. Even though you didn't ask me and you want to take pictures.
Yeah, I took some pictures already, but okay, that's cool too. That's even better.
Yeah, I think so.
Yeah.
So as you begin to work with this, you're going to have the first one in course content, which you saw how I work. You'll be able to pull that up and go through it as you review the lecture. And then you're going to say, I got it. I'm going to go and get 2 done.
For sure.
And the A student's going to say, I'm going to go on and do my 5 now, because I know he's going to ask me to do it. So I'm going to go on and get that done too. But as we did last time, with learning to do a trial balance, we're going to do it enough that you know how to do it. So I'm confident in that. And of course, with that little journal entry study problem, remember that little problem with 40 journal entries? Y'all remember that problem? Well, for midterm, I'll assign you some of those journal entries, but you're going to have to go through all of these steps with that problem. But you will have more journal entries. So we'll talk, about that later. But okay, so think about what's happening in the course. You can make journal entries, you can prepare a trial balance, and you're becoming proficient with Excel. That is a lot in itself, Noble, right?
Yep, I'm with you.
Okay. So our goal is what? For you to know more than when you came in the course. That is the purpose of, you take a course so that you know something afterwards. And I can tell you that I don't care what your major is or what it used to be, for those who are switching to accounting, who are so excited now. But you got to be able to work with, financial statements. Managers manage budgets. Sales individuals manage sales budget and make the sales occur. So the sales part of the income statement, that belongs to the marketing people. They got to make that number occur. The managers deal with the operating expenses part and make sure the expenses are where they need to be. So when you're managing an area, when you're really a manager, you got a budget. Okay, you got financial statements. That's when you are really managing, and that's what you should be striving to do. You don't want to be on the sales floor. You want to be in the back office telling people what the sales need to be. See, that's what you prepping yourself for. Okay, so you all have a pleasant, very pleasant weekend with all your new knowledge, and rest a little bit. But by Tuesday now, you need to be able to have trial balance quiz 2 done so we can talk, we'll be able to talk. And so, the fact that it's right or wrong is not the issue. It's the fact that you worked on it and we get you to the point where we can correct what's right or wrong. So you'll be able to watch the YouTube video. I'm gonna put this in course content, but then you've got to then go on and work one yourself. And by the time you work 2 or 3, you'll be where you need to be. So it's beautiful outside. The weather is nice. I may play some golf tomorrow morning. Try to hit that little ball. And I walk too, Noble, so I'm getting in shape. See, sitting down and teaching is bad.
I'm in shape too. I'm with you.
So I get up and walk around.
Mr. Boyd, let's go golf.
All right.
I got you. We'll go to Herman Park.
Now let's go to Southwood.
Southwood?
Yeah.
Okay. I got you.
Need to learn how to do that. I know that requires.
Play for a grade.
So golf is a good thing to learn, business students.
Play me a chess.
Golf is a good thing to learn.
Play me a chess, Mr. Boy. You know how to play chess?
On the golf course.
I'll play you in chess.
Chess?
Yeah, I play chess.
Now, you might beat me in golf, but I want to see you on the golf course. So, take golf. I mean, volleyball and basketball is good. But take golf, okay? If they have it. Okay, so you all working there. We'll see you all on Tuesday. Email me if you need to meet on Monday for office hours. So just email me.
So, all right, Mr. Wood.
I have a good week.